Hi, this is Jen from Realbotix. Thank you for joining our investor call. Today we have CEO Andrew Kiguel and CFO Scott Myers on the call, who will review some of our latest developments. Later we will be taking some questions from the Q&A box located at the bottom of your screen. I will hand it off to Andrew.
Great. Thanks, Jennifer. Welcome everyone to this update call. There's a couple of things on the agenda today. First, want to just provide sort of a sort of an overview here that despite a lot of good news from the company, such as our success at CES and landing Ericsson as a marquee client, we've had a poor start to the year on our share price in what are really some of the most volatile markets I have experienced in my 25 years and sort of following capital markets and being involved in the markets. I'll start off by providing an update on the audit and our Q1. We're making substantial progress. The good news is that we're feeling good that we'll be making the deadline of later this month to get that done. As a reminder, our prior CFO sort of left unexpectedly early due to family issues, which means that we had to start the process early, restart our accounting process with our new CFO, Scott Myers, who we're very pleased with. I can say that the relationship with the auditors is excellent. There's been no issues found. It's really just a function of having started later than we wanted to and having to redo a whole bunch of things due to the prior CFO leaving. So we're on track. There's nothing to be concerned about there other than the fact that we're late. I understand that looks less than great from a market perspective, but we'll get it done and have that out very soon. The key reason I think why people are on this call now is to talk about the transaction that was announced yesterday, which I think has created some confusion in the market. And I want to sort of walk through here what it is, because this is what should be viewed as an extremely positive transaction to our company. And I think there's a lot of miscommunication out there. So I'm going to walk through why we're doing this, the structure, and where we're at now, and then we'll take some questions from people. So the first thing to understand why. The underlying goal for us is always to create shareholder value. We are a microcap stock. We've always dealt in what are speculative high-risk areas with potentially very high returns, with our focus today being on building our AI and robotics business. Over time, to build these businesses, and the goal is always to create, multi-billion-dollar businesses out of what we're doing, will require capital. And obviously, we always want to look to do that in the least dilutive way possible. My shares are held at Realbotix, as are Matt's and the boards and the rest of the staff. We care about this. We're aligned with investors. That goal is not impacted by the announced deal, but I believe it's further enhanced to achieve our goals. So let's just go through what the desires are. I've been very vocal on the desire to move the company to NASDAQ, and the reasons for that are to access new shareholders, new capital. A lot of people have always sort of come to us and said, hey, I'm an institution, I'm a retail buyer. I don't have a way to buy our stock. I don't want to buy it in Canadian dollars. I can't access OTC. As a standalone entity, we don't quite qualify to go to the NASDAQ on our own without having to do what would be an owner's share consolidation, likely a 15 or 20 to 1 share consolidation. That takes liquidity of the stock, and statistically, share consolidations hurt shareholder value. And in fact, ever since I started talking about the NASDAQ, I receive inquiries almost weekly from people who are saying, please don't do a share consolidation. And I've always replied back, that's never been on the cards. The other thing that I've been vocal about is that we have two main businesses. Okay, so when you think about Realbotix, think about it as a parent company that's got two different divisions that target different end markets. One of them, I think people are aware, is an online direct-to-consumer business that's targeted at more adult products. And the other one is a B2C commercial use product that is more of an AI hardware business. In our view, those two businesses have had a problem leaning into each other because they're not super compatible from a sales perspective, and even the products that they're doing are starting to sort of diverge. And so it's always been our goal to separate out the adult business from the commercial business, and then each can lean into its specialty without harming the other. So again, keep this in mind as we get to the end goal and where we're at today. So to summarize, the goal, which would seem almost impossible to achieve, would be list on the NASDAQ, separate the businesses, limit dilution on new capital, and have no share consolidation. On the surface, that would seem very hard to achieve, but we found a solution and a structure that allows us to meet every single one of those criteria. And that's via a reverse takeover of a NASDAQ-listed vehicle. And in a strange irony, investors seem to hate this deal and have been selling off the stock a little bit better today, but yesterday was certainly a bit of a bloodbath, granted on a bad day, but surprised me because we seem to check off every single goal that we wanted through announcing this transaction, and it seemed to be missed. So let me walk through the structure as to how we achieve this, and I want to try to clarify this because, in retrospect, the press release was very technical. It was largely written by lawyers to explain this from a technical and regulatory perspective as opposed to being more shareholder friendly. So Realbotix Corp, and Corp is the key here. Realbotix Corp is the parent company that trades under the XBOT and XBOT-F symbols. Within Realbotix Corp, we have several subsidiaries. One of those subsidiaries is called Realbotix LLC. So there's a Realbotix Corp and a Realbotix LLC. Realbotix Corp is the Canadian public entity, and Realbotix LLC is a Nevada-based entity for which we own 100% of. The only thing that's happening here is we will still own Realbotix LLC, the subsidiary, but instead of owning it as a private company or a wholly owned subsidiary, we will own common shares in a publicly traded NASDAQ vehicle where it will reside once this deal closes. So all we're doing is we're taking something that we own as one share to one, 100% of, and then we will now own it via a NASDAQ vehicle. We will own those common shares. There's no cash leaving the parent business, and the majority of the book value and the revenue will remain. So think of this as almost like we're adopting this NASDAQ company. They're giving us shares. We're going to place an asset in there, and we can use that to grow. So again, going back to this, we own several subsidiaries. Each one is sort of a different division. This is one division that's going to be moving into that business. Abyss Creations is the one that houses the adult business. The direct-to-consumer internet sales will remain. And Realbotix LLC, which currently focuses on the development of the robot technology and the sale of these more sophisticated commercial use robots, will go into this NASDAQ vehicle, and we will get back the shares in that vehicle. Just to be clear, these businesses already have separate accounting, staffing, bookkeeping. They're legally different entities that are just owned by the same parent company, which is Realbotix Corp. So I think part of the confusion here is that people, you got to read sort of the fine print that Realbotix LLC is a subsidiary, Realbotix Corp is the parent. And the concept here is that the publicly traded parent can own various assets. In this case, what's confusing is it's got a very similar name. In the proposed transaction, which is still subject to some forms of approval, we're going to take that Realbotix LLC, and at close, that subsidiary will move to Onco. Onco will be renamed Realbotix. The company here in Canada will also take on a new name, so there'll be some rebranding that's involved. But when we move Realbotix LLC into the NASDAQ shell, we're just taking back shares of that exact business. As one shareholder I spoke to joked after I explained it, as he says, we're selling Realbotix LLC and we're getting paid in Realbotix stock back. That's technically correct. There's nothing leaving the business. If you own Realbotix today, as a shareholder, there's nothing you need to do We're just moving something from a private entity, and now we will hold shares in that public entity. So hopefully that's sort of clear here. So let me get into some of the details. How much will we own and what else comes with this deal to meet the requirements? At the close of this deal, there's a requirement that Onco has to have a certain amount of cash on the balance sheet. This can range from $12.5 million to much more. The greater the cash on the balance sheet, the lower our ownership. But we can't own less than 75%, and we can't own more than 90%. The ownership will fall within that range and will be dependent on the cash available at close. To break it down a little bit further, the cash that will be there at Realbotix LLC business means that Corp, basically what we own today, doesn't need to do any more financing for growing that business. If we were not to do this deal and the parent company raised that capital, we'd be burdened with more fees, warrants, and other dilutive things at the parent capital. The way we're structuring this is that Realbotix Corp, the public company today, doesn't have to issue a single share. We get a NASDAQ vehicle. We'll have control of that vehicle via 4 or 5 directors. We'll own likely around 90% of this business, and it's going to come with cash. That's a great deal for our investors. Like, we will still own it. We achieve the NASDAQ listing, and we fund that business. Likely, at closing, Onco will do a share consolidation, depends on where they are, in order to meet the NASDAQ requirements, which I believe are $3 or $4, depending on what it is. And again, that's a benefit to us because we don't have to do it. Our shareholders don't need to be concerned with what happens in Onco between now and close, because all we care about is the ownership and the cash in the vehicle at close, and we've locked that in via the agreement. So whatever happens to the Onco share price between now and close doesn't matter. We've locked in certainty on ownership and cash. I would also note, Onco went and did a bunch of independent work on their own. They hired an independent investment bank, and they've looked at the stuff. And through this valuation, in terms of how much we're receiving of Onco, plus the cash and everything else, they've valued that subsidiary at over $100 million. So again, it doesn't make sense to me that given the value in our business, that investors don't see that as a potential buy signal and instead are selling the stock. But obviously, I always say we don't control the market. So what's next? At closing, Realbotix Corp, the parent company, will own between 75 and 90% of the company. We will own the common shares, and we'll have effective control of that vehicle on the NASDAQ, including the board. This is expected to take a minimum of 3 months. In all likelihood, it's more like 6 months. There's definitely risk on our side in terms of them having to get a shareholder vote. Right now, the market doesn't seem to like the deal. I think they're getting a great deal because we can take this robotics business. We can be the first humanoid robot company listed on the NASDAQ. Obviously, from everybody who knows, the potential for this business is just massive. And to have that sort of listed on the NASDAQ and access new institutional and retail investors, I think the potential is huge for them. It's huge for us. But right now, there's some misunderstanding here around the deal. There's a lot of little moving parts here that have added confusion to what's happening. So the next question here, and I'm almost done, and then we'll take some questions, but you might be asking, okay, so we're going to own, let's just say, 90% of this NASDAQ-listed vehicle, and it takes off. Well, what are we going to do with that stock? So the plan right now is for us to maintain flexibility and options with respect to that, because closing likely 6 months away, we don't know where the market's going to be. We don't know what's going to happen. So we have 3 options. At the Realbotix Corp level, so the parent company, the one that trades here now that I suspect people on the call own, we can, number one, we can hold the shares and hold that exposure for the NASDAQ company. So that way, the value remains with us, never leaves the company. Number two, we can sell shares if the market's hot and then distribute cash to the XBOT shareholders. Number three, and we're exploring this, is to find a tax-efficient way to distribute the shares to the existing shareholders. so that if you own an XBot share, you'll receive a share in the new company, and then you get to choose which one you want or both. You can say, hey, I want to lean into the adult bit part of the business, or I want to go lean into the commercial part of the business, but you'll have a choice. But in either way, and in all these things, we're trying to maintain flexibility to create shareholder value. We're building sort of these two businesses. They can now heavily lean into their target markets and grow. They can be self-financed, and they'll be done through two separate companies, and we've achieved all those goals that I mentioned at the beginning. Our comps that are out there, I saw this Apptronics company got some attention this week. It's sort of they're building some robots. They have some decent tech, but their whole goal is to build embedded AI, meaning physical AI in a robot that can act and think on its own. And in looking at that, I was like, we've already achieved a lot of that. Through our vision system that connects to the AI, we already have robots that can react with respect to speech, the way they think or the way they move, connected to what they're seeing. And so when I look at the comps out there, I still see tremendous value here for us. And I think that having a NASDAQ listing will be better for price discovery in the market and value creation. And through doing a transaction like this, again, we're not issuing any stock at the XBot level, but we're getting all these benefits, which again, maybe didn't come through significantly enough, or maybe people just read the headline in the press release, but I think it's there. Maybe it's just too buried. In terms of where we are today, the TSX exchange and the OTC exchange, I think in some ways have limited our ability to access sort of a broader set of investors, especially those in the US. I take responsibility if this deal wasn't communicated properly, as the press release needed to be quite technical from a legal standpoint. But I still believe that this transaction will benefit shareholders via the NASDAQ and possibly being the first pure play humanoid robot company listed there. More exposure to investors, less dilution, more growth. Again, we still own Realbotix LLC. It will just be through public company stock in a NASDAQ vehicle instead of holding it privately. So maybe with that, I'll move to answer some questions, and I'm hoping that I sort of explained this clearly. Nothing's being given away. Nothing is lost. There's no dilution here. And of course, everything is still subject to regulatory approval and approval by Onco shareholders, which, I'm hoping as we explain this story better, that people see the merits and how good of a deal this is. I'm going to just look at some of these questions here. Give me 1 second, and I'll get to it. So the question is, will XBot also uplist one day? The answer is yes, that's a possibility. There's a few things to consider there, which is, again, if we can get the share price and the value up well enough, then certainly it's always been a consideration to do that if it can be done in a way that it doesn't hurt the shares. There's been some other sort of things that we've been looking at as well, maybe through ADRs or various things. But sure, if we can have two companies listed on the NASDAQ, that certainly is positive. Another question here, how would we create with Tesla's Optimus if Optimus creates a humanoid-looking bot? Are you in talks with Tesla? No, we're not in talks with Tesla. Tesla's not looking to do a humanoid-looking robot, and I don't think they'd be able to. The stuff that we're doing is difficult to do. We have a lot of IP. We have patents. We have a patent over cameras in the eyes. Everybody talks about having vision systems. I've never seen any other robot company post a video of a robot that can see or identify things. Just us. I've never seen robots out there that are doing things that aren't teleoperated by humans. And so while I think Tesla's got some good technology, they're not selling robots. They're years away. I'm told they're having a lot of difficulties and losing staff. I think the direction that we're taking by not trying to compete with Tesla or Figure AI means we have a more efficient robot that's available now, that can act as a concierge. It can act as in a retail, in a mall, in a school, in a senior's home or a hospital. We have massive end markets with virtually no competition today. Will it improve the balance sheet of XBot to do this deal enough to raise the price? I don't know. I mean, obviously, it's hard to talk about the market performance. There's nothing more unpredictable than how a stock will perform. And certainly, if we had a crystal ball, it'd be a different story. As I always tell people, we don't control the share price. It's really like a popularity contest out there. All I can tell you is that management and the board constantly have conversations about how do we create shareholder value, how do we build this business, how do we leverage the technology that we have. We're not trying to, compete with other people. Question here: how does this help my XBot shares? I think it helps your shares significantly, because if we get let's just take a scenario here. We own 90% of this vehicle. So number one, the vehicle comes with cash, so we can start growing that business. As the NASDAQ vehicle can take off, and like I said, it's been valued at approximately $100 million by the other side. If people incorporate the value of that business into our share price, plus the remaining business and our cash, certainly that should lead to higher appreciation and more volume in our stock. So hope that answers that question as to how it helps us. But I think it helps us by not having to dilute further. It helps us by having exposure to having a stock listed on the NASDAQ. Can you outline key milestones we should look for? I think the milestones are always similar. We're going to be announcing soon. We've made a key hire as a CEO, somebody who came from another well-known robotics company. But we're having calls from people that work at Figure AI and Boston Dynamics who all want to come work for us, because they're seeing the value is greater with a more immediate market in terms of what we're doing than what they're building. But the milestones for us are, let's get the production up. Let's land some more marquee clients like Ericsson. We're planning to do more sort of installations. We're going to be more selective this year and hopefully be more visible in areas. We're getting requests from TV shows, some of the biggest TV stations in the world, that really want to start incorporating our robots. The key is, let's just continue to establish our brand so that when someone thinks about autonomous AI-powered humanoid robots, they think of Realbotix. The other piece I would say is we're really building out our AI agent section so that you'll be able to go to a website and have a conversation. Our customers are looking at sort of custom-made AI agents, but also for companionship. There could be, AI bots for seniors' homes or schools that act as tutors. There's a whole bunch of things on the AI front that we're also continuing to work on. Someone says, how soon will we see an increase in the value of their shares? The answer is, I don't know. We don't control the value of the shares. I mean, I think that there's an increase in the value of shares intrinsically already. Whether the market chooses to recognize that or not is beyond our control. Somebody says here, that there's been communication, but from their opinion, more accurate to say there was no communication, and then investors were shocked. I don't know that I can sort of agree with that. I think for people who listen, I've been talking about doing something with the NASDAQ for a while and not doing a share consolidation. Obviously, we're dealing with material, non-public information, so it's not things that can be disclosed. This isn't a material, we're talking about a company here that has about $1 million market cap that we're looking to adopt. And so I think a lot of this is, from a financial standpoint today, not super material to us on our balance sheet, but we're gaining cash in a vehicle. But I think this is a good deal. I think Onco board and shareholders at LeaseFox think that it's a good deal. It's for Onco to fix the issues on their side and make sure the capital and everything's there. There's no downside risk to Realbotix shareholders. If for whatever reason anything on this deal is breached, we're paid a break fee and we can walk away. And so again, we're just moving our ownership of Realbotix from privately held to owning common shares in a NASDAQ vehicle with cash. Someone's asking, should we be buying Onco or XBot F? Look, it depends on your risk appetite. Largely, I think if you want exposure, I can't speak to them. I can speak to this and we don't give investment advice, but look, obviously we think our stock is undervalued, particularly so this week. We've been hard hit by a whole bunch of macro factors and various things. We try to communicate our story, but you look at our advancements this year that haven't been reflected. Again, another successful CES, landmark clients, landmark hires, like we're moving in the right direction. We're capitalized. If we can get this transaction completed, we'll have exposure via NASDAQ listing, which will allow us to attract, bigger, larger investors. I think we're in the right move, but, we're not providing investment advice. Obviously, though, I can say on a comparable basis, we're undervalued. Someone's asking if there's going to be more efforts made for marketing. They've been seeing more products in time. And I guess this is sort of talking about marketing in terms of selling our products. And the answer is yes. That's one of the keys for this year. We're well capitalized. We have another approximately $2.5 million coming in from the sale of the tokens.com domain. We're building the business. I mean, for people who have been following us, like we started at this in April 2024, so we've been at it for about 2 years. $1 billion business is not built overnight. We're building, we're growing, we're hiring, and we're trying to build a business here that's sustainable over the long run. Someone's asking, does Onco still run its own business that needs money, or is it already stopped? Onco has a biotech. It's a prostate detection business that, from our due diligence, has 1 employee. There's conversations there, but the view is that we'll work with them to see how that fits in, but it's not going to be a material part of the business go forward, and it's not going to impact our business. Somebody's asking for clarification. The adult side of Realbotix is still under the overall Realbotix stock. The answer is yes. Somebody's asking, they seem to have taken a beating since being listed. Why did you choose them? So we interviewed various clients. I think we knew the people at the other side of Onco. It was a clean vehicle. Again, it doesn't matter what happens with their stock. We have a deal. There's a deliverable at close. So again, it doesn't matter where they're at. And as long as they meet the requirements at the end, we're in good shape as shareholders. I guess it's sort of a tough question. When you're looking at vehicles, you look at, what are the fees? What are the dilution? Who can you cut the best deal with? Based on what our conversations, these were the people that we felt we had a very good deal with. Someone's asking, what happens if this deal does not go through? What's the backup plan? So the worst case scenario, if this deal doesn't go through, is we're back to where we were the day before we announced this deal, which is we still have a great company that's well capitalized. We'll continue to look for options to get our business listed on the NASDAQ. That, again, the criteria remain the same. What are ways that we can build the business without diluting us, get listed in the US on the NASDAQ or the NYSE, and doesn't involve us having to do a share consolidation. So there's very little downside risk to us in doing this. Like I said, if it doesn't go through, we're in the same place. There's no loss. We have break fees in there that cover all of our costs. If it does happen, we end up controlling a NASDAQ vehicle. We control the board. We get some cash, and we'll have the flexibility to do what we want with those shares. Does Realbotix inherit any of the debt or other toxic issues from Onco? No. The way the deal is structured is that at close, let's just say it's 90% to us, 10% to their existing shareholders. Again, there might be some flexibility, depends on the cash. It's a fully diluted number, so we do not inherit anything from them. Everything has to be fixed at close on those ratios, so we inherit nothing. Someone's asking how we compare to other companion robots. I think that's more of a broader question. Look, There are some products coming from Asia that are interesting. I don't think they're as good as ours in many ways. Like I saw this one that came out, which is like, oh, it's got a heated body. But we've been doing that for a couple of years. I think we're advanced on things like speech, the ability to pull a robot apart, make it mobile, the ability to plug it into a wall, the ability to use various AIs, a real vision system that's, real embedded AI and physical AI. I think we're ahead of those guys. Certainly the media rod tends to go back and forth from one to the other. We have a bunch of big media moments coming up next month that we're excited about. And so we expect that there'll be some more attention flowing back to us. And if we get this NASDAQ deal done, I mean, if people can imagine, us bringing robots to New York and ringing the bell as for the to open the market. Again, if we were to close this deal, we would love to do something like that. That's the kind of stuff that gets a lot of media attention. Someone's asking, they're not on media, does Aria have a Facebook page, and do you think that would help with exposure? So Aria actually, I think, is the first robot in the world that has social media. So not only do we have, she's got a TikTok, a YouTube page, and an Instagram. I'm not sure she has a Facebook, but certainly we have her all over social media and our business. For sure, we emphasize the personality of the robots. We're actually talking to some people about doing some further things to develop more robotic personalities online. Someone's asking if there's any core IP or patents owned by Abyss that the commercial business relies upon. Is there a risk if either business was severed from the parent corp? The answer is no. Because the co sort of related ownership that there is between the two businesses now, we have licensing agreements between the two. But there's nothing crucial on either side that would hurt either business, but we would intend to keep that relationship alive and well. Someone's asking who the next whale aside from Ericsson and it's swimming around. What I would say is, look, we're in conversations with various groups. I can't disclose who. Some are earlier stages than others, but we're excited and we still feel really positive. I think we have one of the most unique offerings available out there. So I would say we're in conversations with some massive companies. We're in conversations with some medium-sized companies and with some small companies. We're in conversations with schools, seniors' homes, hospitals, doctors' offices. There's a lot going on. We continue to remain optimistic about where we're going. I urge people to remember we're still an early stage company. We're still in the process of, ordering parts, stacking inventory, building the robots, getting the orders out. Things don't happen overnight, but we feel amazing about our IP. We feel amazing about our patents and the conversations that we're having. Someone says, will the stock be listed as Realbotix or remain as one? So Realbotix will remain as one. We will own the other one. And then as step 2, you might get a dividend in the other company. Again, we're trying to find a tax efficient way to do that. We certainly are looking at that. There will have to be some rebranding that's involved in the businesses because you don't want to have Realbotix Corp trading in Canada and Realbotix LLC trading in the US. And so, the board and management are in conversations to decide how to do that. There's certainly goodwill, I think, in the Realbotix name, especially with, probably over 4 billion media impressions in the last 12 months. So we'll figure out how to do that most effectively. But like I said, we probably have 3 to 6 months to do that. We got to close the transaction first before we're, going out and changing company name. Somebody asks if I've mentioned we're in talks in the education sector. Can I expand on that? Yes. So we're having conversations with certain schools with respect to using robots as tutors for language, certain heritage things, but the conversations are quite advanced. But if you think about the education center, a lot of schools are trying to teach their kids about robotics. Well, you can't do that without a robot. Because the robots speak multiple languages, they can help students with things such as, math, extracurricular in various languages and help them, but not just on the robot side. But remember, we have this digital avatar technology for people who remember the Ask Aria, where you can have a full conversation with the AI. Well, we can customize that AI so that it can be, help you with your math homework, your history, geography, whatever it is. You can do it from your computer, and it can be done as a tutor, as a conversational tutor for a student in any language. That's highly valuable as an assistive tool for students, and something that maybe takes some pressure off the teachers or the teachers' assistants. Someone's asking how many full body models have been sold and delivered. So we have currently delivered about 6. I believe we have about another 12 that we need to deliver here in the next while, and we're in conversations for potentially more throughout the year. We're busy right now. We're going to be moving into a new facility. We get the keys in March 1st, and it'll probably take us a few weeks to sort of move things. We have a new COO, again, that comes from the robotics community with a lot of experience there. And so the idea here is to move into this new facility and start thinking about scaling up and becoming more efficient, stockpiling some inventory for parts and things that we need. Because right now we're sort of, we order inventory for, 6 robots at a time. This next batch that we did, we're ordering sort of the inventory and things that we need to build 25 robots. We'll get that done. And then the next one, let's order enough to, build 50 robots. And as we do this and we get into a new facility, we'll be able to continue to, build that way. Someone says, what is currently the biggest bottleneck to scaling production or deployment, and what steps are being taken to solve that? I would say it's the production. We have, right now it's like drinking from a water hose with respect to the opportunities that we have. And I say that we have all these inbound opportunities without really having invested $1 into marketing. What we need to do is scale. And what we're doing to address that is, a few things. So we brought on a new COO. We're moving into a new facility. We're in conversations with a few different OEMs to manufacture the parts of the robot that I would deem to be less proprietary. So to me, the skeletal part of the robot from the neck down has some IP, but nothing that I'm super concerned about if somebody reverse engineers it. I think it's all kind of like somebody could figure it out. The body, we 3D print, so that's easy to do. Where the magic happens is in the head. That's where the facial expressions are. That's where the synthetic skin is. That's where the memory, the vision, the face swapping technology all resides. And so we will always look to manufacture the heads. If we were just manufacturing heads, we could probably crank out 1,000 of those if we didn't have to worry about that skeletal body part. And so I think in terms of, addressing your question, which is how are we tackling this in 2026, we're starting to prepare for the future in terms of being able to deliver. I've said, and it's in our presentation deck, I think by the end of this year, we want to have the capacity ready to go by the end of the year to build a couple of hundred of these per year. And then into the end of 2027, we want to have the capacity to build a couple thousand of these at a time. Again, we're building the demand. There's a ton of interest, but we need to be able to deliver. And, again, to someone's question, which is what's the biggest bottleneck? I'd say right now it's more like let's get in the production done. So someone said, did I get it right? It's a bigger obstacle to produce enough robots than to find enough customers. Yes, that is the feeling right now. We have a lot of demand. We're trying to get robots out the door. But right now, because, we have an interesting dilemma, and this is when we took over the business a couple of years ago. We have the technology, Okay, so the robots, and we're still fine-tuning a little bit. Like as we go through, we're like, oh, maybe we can use this motor here. We'll make it more efficient. It makes it a little more quiet or a little more responsive. We're continuing to develop the technology. So the AI is getting better. We're finding ways to make the movement smoother. We're making ways to find the embedded AI better. But we've been building these largely by hand in the lab. We haven't invested $1 into marketing, but people see our videos. Every time we go to a conference, every time a video goes viral, it leads to 5 or 6 calls. And then we start chasing these down. So we've hired people now. We have someone who runs biz dev for us. We have people who are sort of helping to manage the sales. If you go to our website, there's a very good brochure. It tells you all the details on the robots. But from our standpoint, it's not just about building the robot. You want to deliver a great product. How do you ship a robot? How do you provide a warranty on a robot? What about the instructions for operations? How do you train people? Is support lines? All of these things that go into building a great company. It's not just about, throwing a robot in a box and putting a shipping label on it. We're trying to build a high quality white glove service business here. When we're dealing with companies like Ericsson and other names, we want to deliver something to them that is complete. And sometimes that's more than just the product, but it's all the peripheral things around that product that make the experience feel good for the client. And so those are some of the challenges and things that we're dealing with today. I think that answers most of the questions. People are always welcome to message me. We've updated the deck on the website. It's got an overview of the transaction. Again, I want to sort of go back to the transaction, which is, I think, really the purpose of the call. We can hold another call. We did it on X Spaces recently, and we'll do that again soon. But again, going back to this transaction, the downside for Realbotix shareholders is nothing. If the deal doesn't go through, we remain the same, and we'll continue to find that way to do it. But this vehicle meets a lot of the criteria that we want. It's not diluted from a shareholder standpoint. We're taking an asset that carries very little value on our balance sheet and monetizing it for a much greater value. We will control it. We will own it. There's no assets being given away here. We're just taking something that's held privately, and we're going to transfer it into a public vehicle that will have shares. It will be able to finance itself. It'll be able to grow. We will still have the exposure and the control through the parent company of XBot, which is, again, where I hold my shares, and I think a lot of people on this call hold their shares. So with that, I'll end it here. Feel free to send us emails via the contact if you want. I think people who, and I see some familiar names, I try to respond to everybody. I think that's one thing I try to pride off. And, we get probably 10, 15 messages, a week through the contact, another 10 or so I get through LinkedIn. I try to respond to everybody on a timely basis. We're confident in our business. I love our business. I love what we're doing. I think the fact that we're doing this totally unique thing that is outside Wall Street, it's outside Silicon Valley, and that, we're getting all this attention and beating some of these guys at their own game is incredible. The biggest challenge is the capital markets, which, remains difficult to communicate. People want all the answers right away. That, we can't disclose all the things right away. We do our best. We do think about the things going on, and we want to deliver value. We want to create value. I take responsibility here if the press release didn't quite communicate this, and I hope that this has clarified things for people. With that, we'll end the call. Thank you very much, everyone.